I have made 16 large predictions for SoFi's next earnings call that is coming up this Monday. Okay, going through all of the data of me covering this stock for probably over 600 hours worth of research, and all of the data that I have on my spreadsheet has led me to these numbers. Now, there will definitely be inaccuracies whenever we go over these predictions. There always is. However, I believe we're going to get more accurate as time goes on, as we learn more about this company. So this is exactly what we're going to do. We're going to take a look at members, at products per member, lending, financial services, tech platform, the whole 9 yards as we go through this colorful rainbow of little things that we're talking about on this spreadsheet. Okay, let's start off with what we've seen on members to begin with. Going all the way to what we are right now. Q2 is public information. Q3 in this nice orange color, okay, is going to be the actual prediction. So what we've seen is between 300 to 500,000 new members continuously per quarter. Last quarter, we saw something spectacular, 584,000 new members. Now, this was an absolute blowout quarter, something that I don't necessarily think will be very sticky or replicable very often, okay? Now, as we get more members over time, the cross-selling and network effects will continue to multiply, and it'll be easier to get that many high member counts. But next quarter, I don't necessarily think it will be that high. I do still think it would be quite high, 540,000, with an increase quarter over quarter of 8.65%. I think that it'll be high for a couple of reasons, and then also negative for another one, okay? Most recently, Taylor Swift Eras Tour ended itself in the SoFi Stadium, seeing so many ads to app downloads to website traffic. It was quite explosive. A single person can bring that much extra to an economy, and specifically a stock like SoFi. It's unbelievable. But that being said, there was actually a change to SoFi's numbers last quarter that's going to change the way that member numbers are calculated. Before, there was an average of what they assumed was about a 3% drop off from the total member count for people that had chosen to actually delete their accounts eventually. Now, they're saying that that number could go up to as high as 10%, as they've recalculated the number for people who don't want to have their numbers publicized. Now, this is another reason why I think it'll negatively impact the actual stated number. However, the actual underlying fundamentals of how much the actual improved member counts have actually gone won't necessarily change, but it is important to understand that that will impact this non-GAAP number. Going on to number 2, which is products. What we've seen recently, and especially with the high amount of new member counts, is that there's a high amount of new product counts, 846,000 new product counts, increasing quarter over quarter to 9.9%, with products per user at 1.507. It continued to go down as member counts continued to increase at an explosive rate. I believe that there will be much more cross-selling from this 584,000 that saw a big bump, to go from SoFi Money to SoFi Relay, and then maybe even cross-sell into an invest platform or credit card. So I do actually think, and as I delete this, that we'll see, about 820,000 new members, but an actual increase in products per user to 1.52 products per user. Slight increase, but that's how I derive the number of 820,000. I do want to give a little disclaimer, by the way, on this video, that some of the numbers were derived in different ways. I didn't just take growth rates for some numbers. I didn't just take news for others. I'm taking this from an assortment of a bunch of different details that we're getting as SoFi investors. So some of these numbers, like products, were derived from what I think the products per user will be, where others, like as we talk about credit cards, will be very different than what I think will happen in student loans, and vice versa. We'll talk about it as we go along. Now, getting back to the video. Going on to lending. Oh, I think I just leaked it a little bit. Last quarter, we saw an amazing amount of growth in this quarter, seeing increases quarter over quarter to 6.2%. And I've also added in these two categories as well: the percentage of lending that accounted for new products, and then the percentage of the total product count in general. As you can see, the percentage of new products is actually lower than the percentage of total products. This is because financial services is starting to eat into that total product count. But as we start to look to all the different products and we show off these different statistics, it'll make more and more sense, give us better insights into how those products are doing in the general scheme of how SoFi is doing. As I delete this, I believe that in regards to the actual lending to financial services sort of balance, that it'll be extremely even. 10.37%, 10.36%, very, very even to around 85,000 new lending products, because things like personal loans and student loans will be strong. But I also think that that financial services will be just as strong as well. But we'll talk about that, obviously. Going on, let's talk about financial services really quickly. What we can see last quarter, unbelievable quarter, and this is mainly due to certain products that we'll talk about, like SoFi Money. But the actual amount of new products last quarter got up as high as 89.63%. Will that continue? Yes. As you can see, is this the same thing across here that it is here? They're the only two statistics in this entire thing, which will lead to an additional 735 to 736,000 new financial service products, and we'll break that down. But first, technology platform. In this beautiful green, we slide along here. There's been a little bit of news in the way that Galileo and Technisys have actually done. So this is Galileo's number, first of all. 130 million, almost 131 million in Q4. Then there was actually a 4 million count decrease. This was because we lost our second largest client, Current. Now, Current, once they dropped off, had really impacted the total number of accounts. Actually, we lost more than 4 million users, because that was 4 million after how many we gained from all our other clients like Chime and Robinhood. Going on, then we added 3 million, and my expectation is actually that we're going to add 2.5 million more onto that number. This is just because, from what I'm hearing, that maybe we've gotten some clients in Experian and maybe some Latin American clients, but I don't know if any of those big fish are specifically going to be fried just yet, right? Even Anthony Noto has spoken, saying that Q4 is the big quarter for SoFi, for Galileo, and that we'll see marginal single-digit growths for Galileo going forward. So that's my expectation for the tech platform. Now, personal loans. I think that this product will be an absolute stunner, in my opinion. Do I think that it'll be as strong as last quarter? I don't know. This was such a blowout quarter. I thought they were going to add maybe in the 70,000s worth of personal loans last quarter, and yet we absolutely surpassed that, going to 80,500 new personal loans. What do I expect for next quarter? I think a little bit of a drop. 74,000 roughly, still large for the amount of products that we're bringing on the platform. And I don't think that we'll be necessarily seeing as high of originations as what we've seen in previous quarters. This is the one that I'm not necessarily certain on. They could be doubling down here. I just believe that they need to make room for some of their other lending platforms. Let's take a look at home loans. Home loans is quite interesting because, as you can see, the amount of home loans that we've brought on, 3,200, 1,700, 1,200, 800, 500, 300, 250, and then back up to 750. So in unexperienced eye, okay, someone that doesn't follow the stock very often would think this is a dying product into a slight recovery. And essentially it was. The problem is that we completely dropped our home lending partner up until Q1 to Q2, where we actually brought on a new lending partner called Wyndham Capital. We actually acquired the entire business. So it made actually acquiring new home loans a fruitful endeavor once again. And so once we did that, I believe that this trend will continue, although home lending is actually still dying across the board. Large banks are also seeing the same thing. And by the way, whenever we're talking about large banks, personal loans has seen, great growth whenever it comes to all the large banks. Home loans still sort of dying. I think that'll still impact SoFi. However, I do think we'll hit new highs of 1,000 new home loans, which should bring on I'll give you guys an extra little prediction here. About $300 million worth of originations because of this 1,000 new signings. So going on to student loans. Looking at student loans, I wanted to talk about a couple things. Once again, what's seeming like a dying product, if people don't actually know, in September, this was actually the first month that student loans are required to be paid back once again. Started in September, which means that Q3 had 1 month to actually start bringing on some new originations, new strong originations at least, being forced to because the actual requirement for student loans has come back. Now, this doesn't mean that the majority of people will switch back in that one specific month that student loans have returned. In fact, the bills didn't actually start getting sent out till October 1st, which is Q4. I still think the large return for student loans will be in Q4. However, going from 6,500 new student loans, I think we'll actually add 10,000. And in fact, we brought on $395 million of originations. I think we can double that to 800 million. Money accounts. Going from over 200,000 new product ads per quarter, we broke a new high of 280,000, at least the new high over the last 2 years. I think actually we passed that in a previous year, like in 2020, if I remember correctly. But still, my expectations, 279,000. I do believe that in the total percentage of accounts, that this will still be the shining product for SoFi at 34% of total products, of total new products, which will increase total products. But yes, so I'm expecting a larger amount of new products. And then in that case, that's where I derive the 279,000 new SoFi Money users. And this is because APY is super strong right now. Users are expecting that they want to make money on their money that they're saving up. I talk to, people on the banking side that are working for Morgan Stanley, working for some of these large banks, and yet they still bank with the likes of SoFi because the APY is just so high, right? We're also seeing that on strong website traffic. I think that this is one of two very strong top of funnel products right now, which means these are the products that SoFi wants to get the user through the door with. It also enables them to get SoFi Plus, which is a direct deposit product as well. Now, this brings me to a little additional, prediction, which is deposits. I expect that deposits will hit just a little over $15.5 billion. This number was derived from an expectation of how fast deposits per member would be growing. And I expected deposits per member going up to just a little over $5,500 per user. Going into SoFi Invest, what we can see, and I'll try to bring that up a little bit, quarter over quarter for the most part has been a little bit stagnant as people are actually seeing that the markets are no fun. And the way retail investors work is that if it's not green, they don't want to be involved. Last quarter, what we did see is that there was a little bit of a return to markets. And so in Q2, there was sort of a return to markets in that way. So a doubling of those accounts, which was quite exciting. However, I do think that in some numbers that were coming out from Robinhood, from Interactive Brokers, from Charles Schwab, all of these accounts had sort of shown slower numbers. However, whenever looking more towards the big banks, they actually saw an increase in assets under custody. So this was a mixed bag for me. I didn't know how to quite address it. And so I kind of took a middle of the ball kind of approach here. 82,000, a slight slowdown, as it's not a product that we actually want to sell too much of. It's still a loss leading product for us. We don't make a ton of money on it. In fact, we lose a lot every single year to try to hold up that product. And in fact, why don't we look at another product that we lose nearly $75 million annually on? Credit cards. Okay. So before we were adding 25,000 members, this got all the way down to 14,000 as defaults had hit a really high percentage in credit cards, way higher than any other bank that I've looked at, as high as like 20 something percent in defaults. That cannot be sustainable. This number actually started to go down, I think, to as low as 18%. I expect that default to continue to decrease as credit tightening continues to happen. We bring up the average FICO for credit cards. I believe that last quarter we saw 20,000. And with the improvements of defaults, I could see 21,000 new credit cards coming onto the platform as we continue to expand and cross sell those products. Quite interesting. Very happy with that. Referred loans. So this is quite interesting. Referred loans, I took an approach where if you look at quarter over quarter growth, what we could see is that this product was growing for some time and then they just kind of stopped using it. Like they were using it less and less and less. However, I can't see that continuing to happen. What I think is happening is that as rates are getting so high, that people are looking to get a personal loan at a certain rate. But then these B list lenders that are actually approving these referred loans are actually kind of being priced out because the APR on those rates are just way too high for the customer to be happy with. That being said, although that is definitely still the case in Q3, I do believe that there's such a high want and need for debt consolidation from credit cards because credit card interest rates are as high as possible. That's also why I think that there'll be an uptick in credit cards across the board. There has been great growth for all big banks and credit cards, but those do need to be debt consolidated down to lower interest rates. Will it be a great interest rate cut? No. Do I think that we'll just see marginal growth? Yes. 3,000. I think this will be the end of that spiraling off for referred loans. We might see a little bit of lead generation money from that. SoFi Insights, ladies and gentlemen. This is previously known as SoFi Relay. It's the budgeting tool. It's the top of funnel product that we've seen all the time. So look at this. You see some of the highest product ads that we've ever seen in SoFi's history. 347,000 for a single product. It's just unbelievable. SoFi Relay is an amazing product. People are loving it more than ever. And it's the cheapest onboarding product that SoFi has and one that allows us to collect great data on our future customers. This makes up for 41% of the total new products, with 27% of every SoFi member, okay, or SoFi products in general, being from SoFi Insights. I don't think that's going to change. In fact, I think that this product is very, very exciting. I think that we add on an additional 328,000 new Relay members, a total of 40% of new product ads. Now, this brings me to another bonus prediction. Okay. Like I said, this is the top of funnel product. This is what I believe will actually help bring down the customer acquisition cost for SoFi and allow them to cross-sell into more products. That brings me to a little prediction: customer acquisition cost. So historically, looking at all these numbers, it has been quite high in Q1 of 2023, then a massive drop-off. I know it still doesn't look massive, but cutting $100 off of a per user acquisition was incredible. Because of the little slowdown that I believe we're going to have in members, still to 540,000, I do think that that is going to impact new customer acquisition costs to $318 per person. Another reason why I think that we are only going to have 540,000 new members is because we are going to have to cut a little bit of that sales and marketing budget as we go towards profitability. Last but not least, in the product section, we have SoFi at Work. SoFi at Work last quarter saw, or a few quarters ago, saw 7,600, 5,000, 3,600 new members. It's been slowly decreasing. However, the need for employee benefits is one that's very hard to calculate. Okay. I think that this is a mix of, obviously, companies are trying to cost cut and they're laying off people and all of these things. And so higher amounts of new companies looking for better employee benefits to retain their employees is not the strongest thing right now, as people are trying to save costs on their businesses. That being said, we've put out new products ourselves. And with the ramp up of new student loans coming out in student verification, I do actually think that will push back against the cost cutting and bring up the numbers slightly for SoFi at Work to 4,000 new members. That is, for the most part, all of the products that SoFi has to offer. And by the way, there's going to be significant inaccuracies in here. It's just my blatant takes on what we're seeing across the board from SoFi and everything that I can see. And this is what I've derived from all that due diligence. With that being said, let's talk about numbers. SoFi's revenue has been steadily increasing over time to $508 million. If there's something that I think I'm going to get wrong, it's going to be this number right here. um, and then also revenue per member, revenue per product, lending, financial services, and technology platform. I've broken down net income and then the total net difference till profitability. Let's talk about it. Revenue, $535 million. This will be a slight slowdown in revenue quarter over quarter. Okay. Revenue per user will also decrease as more amounts of the products actually go towards financial services. Same thing for revenue per product. We've seen it for quarters on quarters on quarters. And then, as we can see here, lending revenue, financial services, and technology platform will slow a little bit from last quarter, particularly because I think the balance of originations will be more in the favor of, not more in the favor, but more in the favor of last quarter towards some of those lower end products like student loans, like home loans, versus the more popular, more profitable personal loans that we have currently. Not saying that they won't also do amazing numbers on personal loans, but financial services, I think, will have a massive ramp up like it's had for many quarters in a row, going from 12 million 2 years ago to 115 million this quarter, and then $90 million of technology platform revenue, leading to negative $20 million as a net loss, bringing us extremely close to profitability and also putting Q4 profitability on track. But ladies and gentlemen, that has been the 16 to roughly 18 different predictions for SoFi Technologies' upcoming quarter this Monday, which, by the way, will be live streaming on the actual channel here. If you guys want to see that and want to be notified for when that's going to happen, make sure that you guys subscribe down below, hit that notification bell to get updates on all the future content just like this. And then we'll also assess how accurate I actually was on these predictions. Until next time, guys, thank you so much and bye for now.